Good afternoon and welcome back to my channel. This is a regulatory platform where we discuss issues affecting the insurance industry in Nigeria and elsewhere, and we do concentrate on regulation and supervision. If you are coming to this channel for the first time, my name is Dr. Sam Onyeka and you are welcome. Before I continue, I would like to plead with you to subscribe to this channel so that we can feel encouraged. Also, remember to turn your notification button as you subscribe so that when we upload new videos, you will get them. All right. During the last episode, we discussed insurance as object of regulation, and basically we explained what the insurance companies, if you like, do in practice. And we also identified government's interest in the business and what the government would want to regulate. Now today we are going to be looking at the composition of the insurance industry and by implication who are the subjects of insurance regulation. Quickly, the insurance industry is composed of the insurers, the insured, the intermediaries, the regulator or regulators as the case may be, and the representative associations. So we're going to be looking in details these various components of the industry, beginning with the insurers. Now someone may ask, who are the insurers? Insurers are underwriters. Remember during the last episode when we discussed the business of insurance, we identified the fact that they underwrite risks. So they carry risk, they are risk takers. We bring our risk to them, we pay small premium, and they carry the risk, and we are compensated in the event of loss relating to the subject matter of insurance. Now, I want you to know that there are two types of insurers. One is the direct underwriters, direct insurers, and the other one is reinsurers. Now, the basic difference between the two is that the insurers are more in number, the direct insurers, are more in number than the reinsurers. Everywhere you go, you find one insurance company or the other, but the reinsurers are few. But when it comes to capital size, in terms of the money they use to do the business, the reinsurers have much more capital and they are much more capitalized. And so they are bigger, like I said, than the direct insurers. Now, the function of the reinsurers is to provide additional capacities for the direct insurers. In fact, they are like the buffers, they are like supporters of direct insurers. So direct insurers will ride the business, and whatever capacity that is beyond them, they transfer it to the reinsurers. The direct insurers share their premium with the reinsurers, and the reinsurers make contributions when there is a loss in proportion to the premium they have received from the direct insurers. So they work together, and the direct insurers are able to write bigger risks with the reinsurers behind them. All right, so now we go to look at the insured. Who is insured? The insured is a generic term that describes everyone who has need for insurance and everyone who has bought insurance. And so it ranges from the individual to private and public institutions, to government, to non-governmental organizations, to charities like maybe clubs, and the associations. So each and every of these listed institutions or individuals will be part of what we collectively describe as the insured. All right, now to the intermediaries. The intermediaries are basically agents and consultants that play parts in the insurance business. Now, the intermediaries as agents bring the insurer and insured together, and they earn commission. But for the insurance industry, it's important to make a distinction between the ordinary agent and the specialist agent or the professional, which we call the broker. The ordinary agent is not necessarily a professional, not necessarily an expert, but he can be. All that is required for the ordinary agent is to have the capacity to sell the product, to know and understand the features of the product he's selling, and be able to convince the insured to buy the product. That is all that is required. And this experience can be gathered from maybe working for an insurance company for a while. It may also be by taking some basic proficiency tests. So whichever way. And once the agent is qualified, he is issued a license by the regulator. But one thing is that under our current law, agents must be under the insurance companies that appoint them. An agent is not meant to be independent at this stage. So they are allowed to sell for one or two insurance companies, but not for different insurers, just for you to know. Now, for the broker who is a professional and an expert, he has better understanding of the insurance industry, understanding technical issues around insurance business, and even the legal issues to some extent. So he's a professional, and he belongs to a profession which is regulated. And even in the realm of the law, he's taken seriously more than the ordinary agent. Because of course you know in the law of tort, and particularly negligence, if a person holds himself out as a professional, as an expert, then is expected to demonstrate minimum standard of care in discharge of his responsibilities, failing which he may be subject to penalties under the law. So just for you to note this distinction between the ordinary agent and the broker who is more of a professional. All right, now apart from the ordinary agent and the broker, we have a number of other professionals that come under this intermediary classification. And we are looking at loss adjusters and loss assessors. The two are related, but there is a distinction. The distinction here is that while the loss adjuster represents the insurer that appointed him, the loss assessor represents the interest of the insurer that appointed him. Now, the work of the assessor is to help the insured to assess the loss. And the loss, of course, it requires an assessor to be able to determine exactly what has been lost. And at least the insured is able to make an estimate, fresh or initial estimates that could be sent to the insurer for review. Now, when the insurer gets the estimate from the insurer, estimate of either repairs or replacements, as the case may be, the insurer gets the services of the loss adjuster to advise as to the actual loss and what must be remedied and how much it's going to cost. So based on the advice of the loss adjuster, the insurer is able to make an offer for payment or compensation, as the case may be, to the insured. So basically, they are experts, they are professionals in their rights, and they belong to professions that are regulated. But they render services relating to quantification of loss either to the insured or to the insurer. All right. Now, other people that come within the intermediary classification include lawyers, accountants, auditors, surveyors, who have one thing or the other to do to support the insurance business. So we also classify them as intermediaries. All right. Now, let's look at the regulator or regulators. The regulator is the government agency or institution that is charged with responsibility of ensuring control of the business. In Nigeria, we have the National Insurance Commission, which you're already familiar with, and is a unified regulator in the sense that it handles both the solvency or prudential aspect of regulation and also the market conduct dimension. In some other jurisdictions, you may have what we call twin peaks, which means having a different regulator for solvency and a different regulator for market conduct. An example, typical example is the APRA, in Australia. That is that. Now, at the beginning, I said regulator or regulators, and what I mean by that is that apart from the specific regulator, there may be some other general regulators. For example, companies that are operating as public companies or quoted companies, they also come within the regulatory purview of Securities and Exchange Commission in Nigeria. And then, for purposes of financial reporting, we have the Financial Reporting Council, which has general purview of all institutions that are financial in nature and have need to render reports from time to time. So the Financial Reporting Council, to some extent, is also a regulator for purposes of insurance business. So that is that. Now I will talk about representative associations. By representative associations, we are looking at those umbrella bodies that represent the interests of the insurers or brokers or other bodies that are involved in insurance business. The one that comes to mind readily include NIA, which is Nigeria Insurer Association. It's the umbrella body for all insurance companies registered in Nigeria. They are very prominent and also make impact in regulation through self-regulation of their members. Now we also have the Nigerian Council of Registered Insurance Brokers, NCRIB. It does the same thing as NIA for insurance and in this case for the brokers. It's a very strong pressure group when it comes to lawmaking and regulation generally. NCRIB is very active in representing the interests of their members. We also have the Institute of Loss Adjusters, which is also the umbrella body for all loss adjusters registered in Nigeria. They are also active as an umbrella body. We also have the Society of Actuaries in Nigeria. They are also active in protecting the interests of their members. They are not very prominent, they are not many, so it looks as if they are not there, but they are coming up gradually. We also have the Association of Registered Insurance Agents of Nigeria, ARIAN, which is umbrella body for all registered insurance agents in Nigeria. So these collectively make up the representative association. So in summary, the insurance industry in Nigeria is composed of the insurers, which are divided into direct insurance and reinsurance, the insured, which include everyone who has something to insure or who has bought insurance as the case may be, and they include government, private and public companies, association, clubs, NGOs, and more. Intermediaries, which include the brokers, the agents, and consultants, and then regulator or regulators, and representative associations, as we have stated. I do hope that this short discussion has enriched your knowledge about insurance industry and insurance regulation for this purpose. We thank you for being here, and we look forward to welcoming you during the next episode. Before you go, don't forget to subscribe to this channel. Thank you. We love you. See you next time. Bye.